Hello, everyone, and welcome to the Sixth Report. Today, I'm joined with Ewan Downey, CEO of I-80 Gold, to talk about the recent drill results at their Cove project in Nevada. Ewan, it's always a pleasure chatting. So last week, I-80 released drill results, which included 12.8 grams per ton over 14 meters. Can you share your thoughts on this most recent set of drill results?
The results that we've released to date, we've just put out two press releases so far on the drilling we're doing at Cove. But Cove is one of our advanced stage projects that we're moving forward towards. Ultimately, what we expect will be a development decision. We've put in an underground decline and a drill platform to do the definition drill program from underground. And the press releases, including the results you just mentioned, are from our initial drilling that we performed into the deposit and confirm good continuity in the zones at definition drill spacing that's required for ultimately a mine decision. So we're very impressed with the results. Obviously, you mentioned one, but there's been better intercepts than that in the first 9 holes that we've released so far.
Thank you for that. And maybe it's worth sharing a little more of the history of the Cove project because you said it was underground. So, who operated it in the past? How much infrastructure is in place? What happened there, and how did it get into the hands of I-80 Gold?
Cove was a mine that was put in production in the late 1900s, just before 2000, and was in operation until 2002 by Echo Bay Mines. They were one of the larger producers back in the early 2000s. The mine was an open pit operation, and at the end of its life in 2002, they discovered a higher grade deposit underneath the pit that they called this Cove South Deep deposit. They started mining the Cove South Deep deposit. They'd encountered a lot of water. It's an area that they hadn't properly drilled the dewatering wells to go underground, but they did because the grades were so good. And they mined it for a little bit, but they found at the same time the gold price was dropping down to just over $200 an ounce. They made the decision to shut the mine down since the open pit was depleted. And since then, it filled with water up to a certain level of the pit. And the site, the mill and the tailings pond, etc., went into reclamation. Echo Bay was then acquired, and the asset ultimately became part of Newmont. And Newmont did a deal on the property with Victoria Gold to do exploration. Victoria Gold found what we call the Helen Zone and did some drilling, but they made a resource error in that. And in my opinion, they completely misinterpreted the geology. So we decided that this was a key acquisition for our company. We acquired it. We, I guess, proof of concept drilled the plan that this was a flat-lying Carlin type deposit. We proved that there was a deposit here, exactly what we had predicted would be there, with very good grades. And ultimately, we drilled out a resource of about 350,000 ounces in the measured and indicated category, but about 1.35 million inferred at a grade of almost 11 grams per ton. So subsequent to that, we put the project into the environmental permitting stage. We successfully permitted it, but didn't have a processing solution until we acquired Lone Tree. So with kind of everything falling into place, we started the decline in 2022. We got into a position where we could start underground drilling at the end of the year, and now we're publishing the results, and to date are demonstrating grades at or above the average resource grade from our previous estimate. And we expect that Cove will be one of our key operations once it becomes operational, given it's actually our highest, what we expect could be our highest grade deposit. And the continuities there, we're very impressed with how the project's going so far.
Thank you. I appreciate the in-depth summary. A little more
Maybe, if I sorry to interrupt, but maybe one more thing I should put in is that we believe that what we're delineating, what we found, will ultimately join with that high-grade zone that they found under the pit. Just the area in between is undrilled. So the deposit that we're drilling is really the on-strike extension of that high-grade zone they mined from the bottom of the mine, but they didn't do any drilling out there in the sort of the far western part of the property.
Definitely worth the interruption. No worries. Thank you. Appreciate that. Now, macro question here. Gold equities have experienced a rather disappointing start to the year and are now approaching the typical summer doldrums. Do you think this year will be any different given the macro environment?
I think this year we had a run up last year in the gold sector. The gold price went over $2,000. We didn't really breach the all-time highs with any conviction. The gold price has come back a bit, but definitely we've seen a significant move from gold prices that were hovering around $1,650 an ounce now to $1,950 an ounce. But we haven't seen that investor, I guess, exuberance come into our sector yet. I think with all of the problems going on kind of globally, global war, which is creating some uncertainty towards currencies, really China and the US having some almost like a monetary economic war in the background going on, who's going to be the reserve currency, and the debt problems and the banking problems in the US. I think there's been a lot of bad things out there that have almost overshadowed the fact that gold has been performing. And the way that especially the United States and Canada are dealing with their financial situation, going further and further into debt, the challenge to the US dollar that we're seeing from other countries, because they've in some ways weaponized the dollars. There's countries moving away from it. Foreign ownership of US treasuries is dropping. I think all of this will ultimately lead to a significant decline in the value of the US dollar worldwide. And we're going to see all-time highs in gold, and the gold stocks or the gold companies, producing companies, will outperform the gold price ultimately. So I think there's a big run to come in our sector, and I think we're going to see all-time high gold prices later this year. Maybe we'll avoid a bit of the summer doldrums because I'm predicting it's going to happen during the summer, not after the summer.
Gotcha. And like you mentioned, the gold price has been performing, but can I get your thoughts on the current market valuation of your company, I-80 Gold?
I truly think that I-80 is pretty highly undervalued. We're kind of being viewed as one of those development stage companies. So if you look at the Lassonde curve, as people often refer to, you get the high in the exploration phase, and when you go into development, you get a low, and then when you get into production, you see another high. And we're developing 3 deposits, which is quite unique in our industry at the same time. So that development curve is going to be a little longer. So I think that's one of the things that has kind of held us back a bit. But historically, you look back 10 years ago, and if you saw a company in a safe jurisdiction, remember that I-80 operates entirely in Nevada. Nevada is ranked the #1 mining jurisdiction in the world. Someone in a good jurisdiction, an inferred ounce in a company would be valued somewhere in the range of between $50 and $75 an ounce per share, like in your share count. And indicated ounces would be $100 or more, and $100 would be for one of the poorer jurisdictions. So historically, I would view just in ounces alone that our company should command a significantly higher value than it does, because as you know, we have about 14.5 million ounces in all categories in resource, plus another 180 million ounces of silver, and that's combining measured, indicated, and inferred. So we are one of the largest holders of gold and silver resources in the United States. We also have significant permitted and existing infrastructure. We have an autoclave facility at Lone Tree with a heap leach and a flotation plant. At Ruby Hill, we have a gold vat leach plant and a heap leach. to reconstruct these sites without the ounces, just to build the infrastructure today, would likely cost at least twice, maybe 3 times our current market cap. So I think on two metrics, we're trading undervalue. We're trading undervalue for our gold resources, and we're trading undervalue for our infrastructure. So I do think that the company is currently undervalued and should see a pretty significant re-rate with the rising gold price.
Thank you for that. So, what's the holdback? What maybe talk about the 2023 remainder of the year, what your plans are going forward for the next 6 to 7 months.
This is a big year for our company. As I mentioned, we have a lot of exploration going on. We have development at both Cove and Granite Creek ongoing, and we're just starting up mining at Granite Creek and trucking material to Nevada gold mines. So there's a lot of moving parts. Sometimes people say it's a bit of a difficult story to follow. It's complicated. I say, well, if you look at Nevada gold mines in Nevada with all of their operations, all of their processing, and you don't find that confusing, we're just a smaller scale Nevada gold mine. So I think for us, it's watching us execute on the development of our projects, releasing updated technical reports that will basically demonstrate additional value on each of our projects as we look at converting those into economic scenarios and ultimately moving to full feasibility. So I think you'll see this year a significant amount of news coming out, from exploration success to development success and ultimately to gold production success. The company was formed out of the SpinCo out of Premier when Premier was taken over by Equinox just over 2 years ago. So we're a relatively new company. I think still getting better known to the market in a lot of ways. Because we are relatively new, we're one of the newest gold producers out there. But in 2021 and 2022, our first 2 years of existence, we were actually the top performing stock in our peer group both years. Most of that on the back of very successful exploration, first at Granite Creek and then at Ruby Hill. This year we're underperforming a bit, largely because we had a couple of large sellers kind of advertise that they were selling some of our stocks, some significant owners, which really at the beginning of this year had a significant cause in depressing our stock. We were trading at all-time highs and dropped down to below $3. So went from over 4 to below 3, where we ultimately traded, and have been moving up from there ever since. And I'd say we've seen a bit of a fallback with everybody else here, with the, as you said, a bit of moving into the potential summer doldrums, or what's happened with the drop from almost hitting all-time highs to now at a very good $19.50 per ounce. But I'd expect in the second half of this year, we're going to see that outperformance again in our company as we deliver to the market, I think, the items that they're looking for in terms, as I said, of exploration, development, and production.
Ewan, great conversation. I always appreciate talking to you. Thank you so much for your time.
Thanks for having me.